they're talking right now, but the decision maker, of course, is President Trump. I'm sure the people who are speaking with China are going to go discuss with President Trump how he wants to play it. He's got an excellent relationship with President Xi, and I think we'll leave that to Donald Trump to decide how he wants to do it. Is that a likely outcome? Sure, it seems that way, but let's leave it to President Trump to decide.
U.S. Commerce Secretary Howard Lutnick there deferring to President Trump on any decisions about extending a tariff truce with China. I'm Paul Allen, live from Sydney. This is Inside, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, Asian stocks slipping as optimism over tariff deals fades ahead of Friday's deadline. Investors staying cautious in a week packed with economic data and corporate earnings. EU leaders being forced to defend their trade pact with President Trump amid grumbles from within that Brussels made too many concessions. The French Prime Minister calling it a dark day. Zuma Wealth founder and CIO Terri Spath is going to join us with her insights on markets and investment strategy as investors assess the latest negotiations. And we'll also dig into the tariff fallout for Asian economies with international trade expert Maes Alconcel, who sees significant negative impacts. Also, Cambodia denying Thai claims that its soldiers broke their midnight ceasefire deal as President Trump claims credit for the truce. Let's get the latest on our top story. President Trump in a new post on social media saying that he is not seeking a summit with China's leader and would only visit under an invitation from Xi Jinping, which he says has been extended. Earlier, Commerce Secretary Howard Lutnick says it's up to Trump to decide if Washington and Beijing will extend their trade truce. Let's get to our China correspondent, Min Min Lo, for more. So, Min Min, what can we take from President Trump's latest comments in terms of a potential summit?
Yeah, it is indeed very cryptic comments here because earlier we had Marco Rubio saying that both sides, there is intention and desire from both sides to hold that summit. But President Trump now tweeting out, or at least saying on Truth Social, that he is not seeking a summit, but he says he will accept an invitation or he would visit China if an invitation is extended. And yes, he acknowledged that that has been extended. And in fact, last month, there was a government statement from the Chinese side extending an invitation to President Trump and the First Lady to visit China at some point. That was at the 90-minute phone call that Xi and Trump had just ahead of those London talks, which eventually led to the dialing down of tensions, both sides agreeing to stick to the terms of the agreement of the Geneva deal. So yes, the invitation is there, and it seems like President Trump is simply posturing here to say that he's not the one that is seeking the summit. He is potentially going to go, but he is going at the invitation of President Xi. Of course, this is coming as we look towards the second day of that third round of trade talks between U.S. and China. A lot of anticipation as to what's going to take place today, what sort of outcomes we could hear at the end of the day.
Yeah, let's talk about that a little bit more. It is day two, as you say, for those talks in Stockholm between the US and China. What are the potential outcomes? And we're still waiting on the possible extension of that deadline, right?
Yes, we have heard from multiple U.S. officials, from Howard Lutnick, from Scott Bessent, both hinting at a potential extension of the trade truce. Howard Lutnick saying that the decision ultimately lies with President Trump. And it seems like both sides are looking to extend that runway to give them more time to work out the details of potentially a larger and more comprehensive agreement, potentially something that maybe the two presidents can announce if President Trump does meet with President Xi or visit China at some point. We know President Trump loves his showmanship. Maybe they may want to leave the big details for him to announce. So going into today, the expectation is that we are going to get potentially this extension of trade truce. Whether or not there's anything beyond that, Well, it's hard to say. Of course, there are many things on the table. China obviously wants to lower those tariffs or wants to get the U.S. to lower those tariffs. It also wants the U.S. to loosen some of these tech curbs. China has been arguing that loosening those tech curbs will allow China to buy more things, which would then go towards rebalancing trade. But of course, the U.S. has other issues that it wants to tackle, including ensuring the flow of rare earths, addressing China's overcapacity problems, as well as the Chinese purchase of sanctioned oil from Russia and Iran. So a lot on the table, and we'll have to see whether or not they deliver something by tonight.
Yeah, and during this time, Taiwan's President Ching-te was supposed to be stopping over in the U.S. The President's office now saying that stopover has been called off. Is that because of the sensitivity around these trade talks?
Well, officially, according to the presidential office in Taiwan, this is being called off because of typhoon recovery work in Taiwan. But we all know the unsaid reason behind this. Just look at the context here. This potential trip was going to happen against this backdrop of the trade talks if the U.S. were to announce that it was receiving the president of Taiwan in continental U.S. at this time. It is certainly going to anger Beijing, which has been opposed to even any sort of informal exchanges with Taiwan. It was originally, there was a plan for President Lai to visit South and Central American countries, and he would stop over in New York and Dallas en route. But it looks like, from what our sources have told us, the U.S. did not green light that because of the sensitivities here. Of course, this is raising alarm bells for some people, whether or not this means that the U.S. is willing to trade off Taiwan for Chinese interests and maybe condone potentially Chinese actions to reunite with Taiwan by peaceful means or otherwise. But of course, it's possible that both sides are just erring on the side of caution, maybe to shift this to a later timing, a more appropriate time when tensions between U.S. and China are not so critical.
All right, Bloomberg's China correspondent Min Min Lo there. Well, the trade deal struck this week between the European Union and the US is facing growing criticism from within Europe. German Chancellor Friedrich Merz initially cheered the agreement. Now, though, he says he expects Europe's largest economy to suffer significant damage from the tariffs. French Prime Minister Francois Bayrou, meanwhile, saying he's also critical. He says it's a dark day when an alliance of free people opts for submission. The EU has agreed to accept a 15% US tariff on most of its exports. The source tells Bloomberg that both sides will seek to clinch a non-legally binding joint statement by Friday that will expand on some of the elements that were negotiated over the weekend. Meanwhile, President Trump is visiting Scotland this week, also told the UK that they'll hear about pharmaceutical tariffs soon.
We'll be announcing on pharmaceuticals sometime in the very near future. We have a very big plan on pharmaceuticals. We want to bring a lot of the pharmaceuticals back to America where they should be. We're going to want to be making a lot of them ourselves, all of them in a sense. But you also have a good pharmaceutical business. We'll be dealing with you on pharmaceuticals.
One of the biggest winners from all this trade action has been the US dollar, seen its biggest single-day jump in 11 weeks. It's on track for its first monthly gain this year, up against all of the G10, up the most against the euro, which has dropped the most in about 11 weeks as, I guess, the reality of what was just agreed to starts to sink in. Might also reflect some concerns on the global growth outlook. We've got the jobs report and Fed decision coming out of the US as well as the next major catalyst, and we're seeing a little bit of weakness in Asian markets as well as some of this optimism around the recent trade deals begins to fade. It's just South Korea's Kospi at the moment in positive territory. Well, let's get a little bit more on markets with Terri Spath, founder and CIO of Zuma Wealth. Terri, thanks so much for joining us. I want to start, if we can, with a bit of a broader discussion around trade. I mean, we've got deals getting done, trade wars being averted, a possible extension of the deadline of the talks between US and China. Do you have a sense of optimism around the trade environment, or are you feeling a little bit more like the markets are reacting today?
Well, obviously, these trade talks and tariff headlines are what continue to define 2025, it seems like, for better or for worse. I mean, it was Armageddon back in February and March. And I think as we've gotten more clarity around a lot of these trade agreements, or at least some parameters, I think they're still pretty unclear. a lot of the agreements, even the ones that were decided as recently as this weekend, I think are still pretty unclear in terms of the detail. But I think that as these are playing out, that it's calming the markets, and that, a lot of the confusion as to what's really going on with tariffs and those being used a lot differently than they have been in years past, as that's been better understood across the markets, we are starting to see a little bit less dramatic reactions. Just as you mentioned today, this deal with the US and Europe that went down over the weekend, kind of got shrugged off, at least in the US. I mean, I think obviously we saw some pain in European markets, but in the US it was sort of almost not ignored, but it was less of an event than certainly trade tariff headlines have been in the past. And a lot of the showmanship that Min referred to that Trump likes to do, I think people are understanding that that's exactly what a lot of this is. Not to ignore the trade and tariffs, but that is a lot more showmanship than was originally understood, I think, a few months ago.
Yeah, and as you say, a lot of detail here still really unclear. But look, one thing we can say with absolute certainty is that the global economy is now dealing with a bunch of US trade barriers and tariffs that just were not there a year ago. So overall, is this a net positive or a net negative for global growth and asset prices? And, is it going to usher in this new golden age for the US that President Trump promises?
Oh, well, I mean, yeah, there's a lot to unpack with that question. I think it depends on what seat you're sitting in. I think that, it's been a V-shaped recovery, as you know, in the U.S. in terms of U.S. stocks, but it's been a very unpopular V-shaped recovery, at least from our perspective. Do we think the rally will continue? We do think it will continue. But there's a lot of investors that I think are still very skeptical about the current recovery and how much this really means overall. For stock prices, for economic growth. These trade agreements that we saw with the EU, that we saw with Japan, they're about as good as the market can expect. And as we get more clarity, as you pointed out, that'll help understand what this means for growth. In the short term, there's no doubt you put a tariff on something, it costs more. That's like a tax. That's a drag on economic growth. But we do get, we're getting good growth numbers here in the U.S. I think we'll continue to see that play out. And so I think it's going to create some risk, but a lot less volatility than it was a couple months ago when these deals were initially being introduced around the globe.
Yeah, well, we are seeing a few things gaining there, and we've got a few things in green next to you as you were speaking. And one of the things that is higher is the US dollar having its best day in a number of weeks since May, I believe. But how sustainable do you think these gains for the greenback are?
I don't know about that. I don't know how sustainable it is for the dollar. I mean, it's definitely been in a trend to the down, to the bottom and to the right, which is not the direction you generally want to see assets go in. And I don't think, a one day or a couple of days is a trend reversal. So we're still seeing, I think, some negativity and pressure on the dollar, and I don't see any reason why that's going to reverse. What I do see reversing is this sort of strong relative outperformance of European stocks versus U.S. stocks. We came into the end of last year, and it was U.S. exceptionalism was the defining sort of theme and thesis that we heard so many strategists talking about, and that just was dead wrong. I mean, we had such great strength out of international markets, European markets in particular, in Germany, as we saw these trade deals pushing fiscal spending and a lot more growth opportunity in foreign countries or international countries relative to the U.S. That relative outperformance of international stocks relative to the U.S., I think that trade is probably over, but we still think that there's a lot to be gained for international exposure, as well as we think for the U.S. But in terms of where it comes out for the dollar, I don't think that there's going to be much of a reversal on the kind of slow downward trend that we've been seeing all year for that.
Yeah, I want to dig into your views on which assets you favour a little bit later on. But before that, I'd like to get to Fed policy if we can, because there is a meeting at the end of the week. The dollar's probably going to be sensitive to that as well. After this meeting, there's only 3 left. The consensus is for 2 cuts in 2025. Time appears to be running out, particularly when you consider the uncertainty that we were discussing around trade policy. When do you think that data is going to feed through?
Yeah, it's interesting that you highlight the two cuts that are still seem to be the consensus for what Jay Powell and friends are going to do between now and year end. I don't see that happening. I don't know why that's the consensus. We're not with that consensus. I think that it's appropriate. I think that the Fed could cut interest rates when you've got, inflation at 1.8 to 2%, and the Fed's at 4.5% on rates. It's really difficult for them to explain their stance. And I think that there's a really good case to be made for cutting rates. But what we have seen over and over again is that the Fed is slow to react. They're going to take a lot of data. Inflation is not as low as they would like it to be. Employment is right where it should be. Growth is fine in the US. And you just don't see the Fed cut into a strong economy. We have a strong economy right now in the US. There's no signs of weakness. There was a little bit earlier this year. There isn't now. And so we do not at all expect the Fed to proactively cut into this strong economy. I think that's a hope, and that's not an investment strategy for us. I don't see why markets are expecting cuts in interest rates here in the U.S. And as a result, that could pressure the dollar a little bit higher if interest rates are a little bit higher than people expect here in the U.S. But I do think that that's going to be a surprise for investors, and as that becomes, I think, more anticipated, I think it's going to cause a little bit potentially volatility here in the U.S. markets.
Yeah, it's an important point to make about the strength of the US economy, and we'll get jobs numbers later this week as well. I'm wondering if you can tell us what your expectations are there, but also for inflation. I mean, again, as we see the feed through from tariffs.
Yeah, I mean, the natural textbook story, just starting with tariffs, is you raise prices. You put a tariff on something that's at a higher price. That's textbook inflation. And we haven't quite seen that in the data yet. So that one remains to be seen, and it is a little bit confusing at this point. In terms of economic growth, I think that was the other question. Oh, no, jobs and employment. I do think that what you are seeing, and we're going to see this in all the earnings reports that come out this week, is that companies are really going to be sitting on their hands when it comes to hiring. And they don't know what's going on with all these deals. They change a lot. These corporations can't change as quickly as the headlines and the deals are coming through. And so I think that there's going to be a lot of sort of sitting on their hands. And I think that could put a little bit of a drag on employment going forward. So it'll be interesting to hear these earnings reports, what companies are doing with hiring, what they're doing on CapEx, to see what that spending is, because that could potentially be a drag on the economy if there's not better clarity for these CFOs and these heads of corporations, what they're going to do in terms of hiring, in terms of spending, because right now I think they're pretty much a little bit frozen and trying to figure out what to do in this current environment.
All right, Terri Spath, founder and CIO of Zuma Wealth, is sticking around. She mentioned earnings there. We're going to take a closer look at US earnings season of the Magnificent Seven leading upcoming results this week. Stay with us for that conversation. This is Bloomberg. Welcome back. You're watching Insight. Earnings from the Magnificent Seven going to ramp up this week. Results coming in from Meta, Microsoft, Apple and Amazon. Efforts to deal with tariff-fueled cost increases and AI investment needs to be top of mind for investors. Terri Spath, the founder and CIO of Zuma Wealth, is still with us. And Terri, where we left off there, you were talking about some of the uncertainty sort of causing a bit of a wait-and-see approach among some corporates. Does the Magnificent Seven fall into that category for you, particularly when you're having a conversation about CapEx and hiring?
100%. 100%. I think that, as you pointed out, there's a lot of the big names are reporting earnings this week. I think it's the biggest week for earnings of the quarter. So there's going to be a ton of information coming out, not just from the mega cap names, which will be very helpful and insightful, but from across the board. And I think what we're going to be watching is not necessarily the earnings numbers, which obviously we'll want to watch, but I think they're going to be good, is what these companies are saying about what their spending is in terms of hiring, what they're saying about writing checks for CapEx, because a lot of the Mag 7 in particular, those valuations are being supported right now by a belief that AI is going to change a lot, and that means they better be spending a lot on CapEx. So if there is some concern about where are we going to build this infrastructure and who are we going to hire to do it and where are they going to live, if that's tapping the brakes, and I think it probably is, that's going to be a problem for some of these companies. So that's something that we're very much going to be focused on when it comes to earnings this week, is what they're writing checks for, what they're not writing checks for, who they're hiring, where they're spending, because we absolutely need to see this continued push in AI to support the valuations for the Mag 7. But if you look at the other 493 companies, of which many, many are reporting this week, we also think that those earnings numbers are going to be pretty good. And that's where the valuations are actually, not nearly as lofty and nosebleed levels that we're seeing for some of the, the biggest names out there. And they can also provide a lot of information in terms of how they're reacting to everything that's going on with these different, trade headlines and decisions, and how that's impacting their earnings as well. So it's going to be a very interesting week and provide, I think, a lot of information, not just for stocks here in the U.S., but, the view globally.
When you talk about some of these nosebleed valuations for the big tech, I'm assuming you don't look at adding to positions at this stage. In fact, it sounds more like you're setting the scene for a pullback.
Well, I wouldn't necessarily say a pullback, and I'm glad you brought that up. If there's the risks that we're looking at in the market right now, there's a lot actually that are going on this week. One, as you mentioned earlier, there's a jobs number that's coming out. There's inflation numbers. There's an FOMC meeting here in the U.S. There's tons and tons of earnings. But what gives us a little bit of comfort against that backdrop of all the risks that we're keeping an eye on is that the recovery that's been going on in the U.S., we just don't think is very well liked. I won't say it's hated, but it's not a very well liked recovery. And we don't necessarily see peak valuations when people are somewhat complacent or somewhat dislike a recovery. It's usually more over exuberance and we're, just fear of missing out. And we got to run out and just buy anything and pay any price for it. We're nowhere close to that type of emotion in the market. And so I do think that allows some cushion against some of the risks that we could, see this week. So, but we are concerned about the valuations for a few stocks. But I do think that you can continue to buy in this market. We're constructive on this market. We're not selling at all. We're not taking money off the table. We're moving forward, and we think we're going to end this year higher than we are today.
Terri, very quickly, I know you've got something of a contrarian position on gold. 30 seconds. Is that somewhere where you're taking money off the table?
Oh yeah, we actually we've been talking about gold a lot this year. We've liked it. It's never been a permanent allocation, but it's been a safe haven this year, and it's been a shiny, great trade for gold. But it breached its 50-day moving average. That safe haven status isn't necessarily needed anymore now that we're out of the darkest times of what we think happened in 2025, and so we've cut those positions down by about 75%. So we're out of that. Just about.
All right, Terri Spath, we'll leave it there. Thanks so much for joining us. Terri Spath, founder and CIO of Zuma Wealth there. Let's take a quick look at our US futures tracking. A little bit of modest positivity there. We are seeing some broad weakness across the Asia-Pacific at the moment, but S&P futures, they're better by 0.1%. Still to come, international trade policy expert Maes Alconcel tells us why President Trump's tariff war undermines WTO rules and is not the free or fair trade that the US used to once advocate for. This is Bloomberg.
I think that's a relief because it's a matter of expectation from 25 to 15%. I think a lot of business leaders, including in the autos industry, I think we had thought that, we have to accept the 25%. Then what to do with the 25%? Should we increase prices to to export to the United States, or we should absorb, then to what extent. But in case of 15%, to some extent, we can absorb.
Tak Nianami there, Chairman and CEO at Suntory Holdings, speaking to us earlier on the Asia trade. Here's a look at how Japanese stocks are trading after the lunch break, or heading into the lunch break. Well, we've got the Nikkei a little bit weaker there, 0.8%. The Topic's heading for a third straight day of losses. Bit of political uncertainty hovering around Japan at the moment. Shigeru Ishiba, the Prime Minister, denying last week's reports that he's stepping on, but the LDP is going to be holding a joint plenary from both houses in the coming days. A number of lawmakers stepping up calls for Ishiba to step down after that underwhelming upper house election on 2 weekends ago. We've also got, of course, the BOJ meeting on Friday. No change expected to rates there. The yen, one of those currencies that's weaker against the greenback following the EU trade deal, 148.42 at the moment. Well, the Thai army says clashes with Cambodia continued until early Tuesday morning, despite both sides agreeing to an unconditional ceasefire from midnight. Cambodia's military, though, denies that, saying there's been no fighting since the truce went into effect. Let's bring in our Southeast Asia economics and government reporter, Ramsey Al-Rikabi. So, Ramsey, what's the latest here on the ceasefire? Is it holding?
Hey, Paul, how you doing? It's kind of, as you mentioned at the top, it's a little confusing. This morning, Thailand said that there had been clashes overnight up until dawn at various points along their border, and was very explicit in blaming Cambodia for it. Cambodia came out and just said it's been peaceful and everything's fine, all quiet on their disputed areas. So there's a little lack of clarity just at the moment about what's happening, but that's not necessarily uncommon in this conflict. It's in a fairly remote area in southern Thailand, in some mountainous regions that have been disputed for a while. So we're still keeping eyes on it. And you have to keep in mind that both sides right now, given the threat that Trump has made on trade with both of them, have pretty high incentives to keep it quiet. So we've heard some reports from the Thai side, nothing on the Cambodian side, and we're still tracking it very closely. But it was, as you mentioned, it was supposed to go into effect midnight local, and at 7 a.m. today, the regional commanders were supposed to meet. That was pushed to about 10 a.m., which is 11 Hong Kong.
Well, President Trump did threaten trade consequences for both countries. Was that significant in clinching a truce?
It appears so. Before he weighed in over the weekend, Thailand, for instance, was insistent that they solve this bilaterally. They didn't want any outside help. The closest probably anyone could get would be ASEAN. But then, lo and behold, on Saturday, Donald Trump started tweeting and getting on the phone, and he went to his usual playbook, which is he threatened both countries that they wouldn't get trade deals with the United States. As I'm sure you know, they have rocketed tariffs globally. Both Thailand and Cambodia were facing 36% tariffs. So that was Saturday, and then by Sunday, both sides said that they would go to Malaysia to meet the Prime Minister, Anwar Ibrahim, who's the current chair of that group, for peace talks. They arrive on Monday, and a few hours later, they walk out with an agreement. And almost immediately, they made references to thanking Trump and also saying that they have progress on trade. Just a little while ago, the acting Prime Minister of Thailand said that they're very close to an agreement, and that's less than 24 hours after agreeing to a ceasefire that Trump had demanded.
Yeah, President Trump not had any success in bringing the war in Ukraine to an end, but what does his response to this conflict say about his peacemaking ambitions?
I mean, this is a little bit of a different beast entirely than Ukraine. I mean, for one, it's almost impossible to come up with a trade agreement with Russia, even though he has threatened tariffs, and as I'm sure you saw the news, he has pushed Putin to come to the table and end this fighting even sooner than before. He had promised before even coming to office that he would be able to solve the Ukraine war. He hasn't, as I'm sure you know, had much success, and his patience with Putin is certainly wearing thin. But in this conflict, the results were much much quicker, and it's a slightly, as you can imagine, less geopolitical challenge for him, given there is no sort of NATO relationship that you need to worry about. Neither of these are nuclear-armed countries. The fighting was quite limited, and both of them have huge upside in terms of trade. Continue to trade with the U.S. You know, their neighbors, Vietnam, Indonesia, and the Philippines, all came out with trade deals around 20 or 19% of their tariffs. And so with the 36% and Trump saying, look, if you guys don't stop, you're not going to get anything better, that did give them a pretty convincing incentive to put their weapons down pretty quickly before this August 1st deadline for these higher tariffs to kick in.
All right, Southeast Asia economics and government reporter Ramzi Al-Rikabi there. Well, our next guest has 20 years of experience in international trade policy, including as a negotiator for the Philippine government. Joining us now from Melbourne is Maes Alconcel. Maes, thanks for your time today. I just want to start with what's going on in Stockholm at the moment. The US and China seem to be inching towards an agreement that the likely outcome seems an extension of the deadline. Does that at least seem like a low bar for progress to you?
Well, I would say, of course, any certainty or predictability, stability at the moment would be good. But it's just an extension. So talks to extend the US-China tariff, the 10-day are a sign that both sides understand the cost of further escalation. But let's be clear, this is more of a tactical pause, but not a resolution or breakthrough. So it would, of course, benefit markets and global trade sentiment, but still leaves businesses navigating uncertainty, especially on long-term US-China trade rules, which has been happening, the tensions has been happening since 2018. And without structural agreement, businesses are, again, as I've mentioned, are left navigating an unpredictable trade landscape. So for me, it's a timeout, not a truce. So businesses still facing uncertainty.
What do you make of the length of time that it's taking to achieve an agreement with China? Because other deals with equally large partners like the EU and Japan, they seem to get cranked out in quick time, but this one's taking a while. Is it because China has more leverage, particularly when you consider its dominance of rare earths, and the US, on the other hand, has a lot of AI and other technology that China would like better access to?
I think, that's a correct observation. We've seen both China and US compete with one another. They're both superpowers, super economic powers. There is still much going on about intellectual property, and about technology decoupling, and the industrial subsidies. These things are actually not going anywhere in terms of progressing. So I think the discussion, or at least making a progress in terms of having a compromise between the US and China, wouldn't be happening very soon. They've tried to discuss these things since even before they launched the first US-China trade war. But until now, we see that there's nothing really going on. It's not being addressed. So again, we're not seeing a breakthrough. The underlying issues that US and China have are not being addressed. So I don't see anything moving really forward, except they'll just probably keep on pausing on the tariffs on both sides.
What impact is the slow progress and the probable delay in reaching a deal going to be having on China's economy? How much investment is going to be parked up waiting on the sidelines for something to happen?
Both countries, China, I'm sure they've invested so much on making sure that they get something, or at least be able to come up with a compromise or meet halfway with the US. But as I've mentioned, with all this going on, on all those high tariffs that's being imposed on China since 2018, the cost for China has been huge. And I'm sure it's the same with the US. US in terms of course, they need to also source from other countries. And it's not easy for companies to just, source something, raw materials or intermediate products from China. And also what I've noticed, what I've observed is China is also losing a lot in terms of market share because some companies in the US, they've started sourcing from other ASEAN countries, ASEAN economies, and especially those that are very embedded in the supply chain, such as electronics, for instance. We've seen that they lose a lot with all this that's happening between the US and China.
What are your thoughts on China's courtship of other countries, particularly in its immediate neighbourhood? And I'm thinking of the recent fating of Australian Prime Minister Anthony Albanese. You've got a 6-day tour and a banquet lunch. To what degree do you feel Xi Jinping's starting to frame himself as the calm, responsible trading partner that perhaps the US isn't right now?
That's actually a very good move, I would say. I think China is really doing a great job in saying, okay, the US now, they're not following multilateral trade rules. They're not the one complying with all these trade agreements that we have. And China, though we've always been seen as someone that's the one that's not compliant, but look at where we are now. We're trying to make sure that although the US is making all this tariff escalation, we're trying to make sure that we're willing to to be able to maintain order in terms of the trade system. And I think when you look at the Regional Comprehensive Economic Partnership Agreement, for instance, that's actually one way of China showing that, look, I can lead. It's not only the US that actually can do all these regional economic partnership or even lead international trade rules. China can actually do it. And I think it's also a good move in a sense that they're starting to diversify. And with all these interventions, government interventions, especially on tariff escalation, it's very important that countries are looking at diversifying now in terms of where to source their raw materials, intermediate goods, to make sure that they manufacture finished products. So I would say, yeah, China is doing a great job now in leading on the international trade system, and they're very proactive at the moment.
Oh, well, you were a former Philippines trade negotiator. Can you maybe unpack for us some of the challenges that those smaller ASEAN nations might be facing right now when it comes to negotiating with the US?
When it comes to negotiating with the US for ASEAN companies or economies, it actually depends on whether they're exporting a lot to the US or very dependent when it comes to exporting to the US. Of course, if you're an ASEAN economy that exports a lot to the US, you would want to make sure that you maintain or manage to get a better deal in terms of tariff rate. Because you want to make sure that your exporters are, although of course they will always be impacted given this tariff escalation, but you want to minimize that impact to them. And if you're very dependent on the U.S. as an export destination market. I would say, ASEAN economies or ASEAN governments would have little leverage when it comes to negotiating with them because they want to make sure that their exporters are less impacted with all that is going on at the moment, especially when it comes to tariff escalation. I would say, for instance, in the case of the Philippines, for instance, because the Philippines exports a lot to the U.S. Of course, they wanted to make sure that the Philippine government wants to make sure that they, as much as possible, be able to lower the import duties that the U.S. would impose on Philippine exports. So they would try to negotiate, since they would want to try to negotiate lower tariffs, they would also say yes or bow down to whatever the U.S. Would ask them to do. I saw on the news, for instance, that the Philippine government actually said, okay, we want to negotiate lower tariffs for Philippine exports, and we are willing to eliminate our tariffs on some of our products. So I would say it's very uneven. It's because you're only getting that bit from the U.S., but then the U.S. wants a lot from you. And I'm sure this is not only in the case of the Philippines. I think in the case of Indonesia as well. I've read on the news that they've promised to open. Yes.
Yep, we'll have to leave it there. We're out of time. But Maes Alconcel, thank you so much for joining us. Maes is an international trade policy expert. Here are some of the stories that we're following. A New York City official says at least 5 people have been killed and several injured after shots were fired in a Midtown Manhattan office building. The victims include one police officer. We're told the gunman was found dead on the 33rd floor of 345 Park Avenue, which houses Blackstone's global headquarters. Employees say Blackstone's staff on the 32nd floor had pushed furniture in front of doors to barricade themselves during the attack. Chinese state media reports say at least 30 people have died in Beijing as record rains batter northern China. President Xi Jinping says the downpours have caused major casualties and property losses in several provinces. China has raised its flood control alert to the highest level and dispatched emergency teams to Beijing, Tianjin and Hebei. The rains are still expected to shift south as a tropical storm nears the eastern coast. Coming up, Jane Street readies its defence against market manipulation allegations from India's regulator. Details next. This is Bloomberg. Let's have a look at how Indian markets are tracking after the first few minutes of trade, really reflecting the broader moderate weakness that we're seeing across the Asia-Pacific. The Sensex just off by 0.1%. Similar story for most of the indexes we're tracking there. The rupee remaining weak. Bloomberg Intelligence, meanwhile, remaining notionally overweight to pharma, materials and telecom in India amid strong momentum and breadth. But there's just a little bit of trade disappointment hangover going on for markets today, and India apparently not immune to that either. Well, Bloomberg has learned that Jane Street is expected to argue that its controversial Indian options trades were a response to outsized demand from retail investors. For more on this, let's get to Bloomberg Asia Equities reporter CJ Chakraborty. So, CJ, why has Jane Street sought this extension?
Well, Paul, I think what has happened is that, of course, all of this entire case is quite complicated. The case that SEBI has made against Jane Street is quite detailed and quite complicated in its structure. And therefore, it seems like Jane Street required more time to explain itself, to respond and rebuttal the allegations that SEBI has made. And we reported yesterday that they have sought this extension. Of course, let's not forget that their deadline, the official deadline, which was the 21 days that SEBI had provided them since the order came out earlier this month, expired last week.
So Jane Street sought this extension, obviously looking to put together a more compelling argument. What's their argument likely to be?
Well, based on our reporting, based on reporting from my colleague Behu in Hong Kong earlier this morning, it seems Jane Street's argument is expected to be around the fact that their trades were largely driven in response to the large bets that retail investors in India were taking in the options market, in the derivatives market. We know that retail investors have been a key driver of the sort of amazing growth that we have seen in derivatives trading in India, especially post the pandemic. And their argument, it seems, is that they were trying to close the gap between the price of the Nifty Bank Index, which was a key sort of index that was highlighted in the order by SEBI, implied by the options and implied by the cash market. And their argument is likely to be that the heavy trading by retail investors had created a wide gap between those prices, and they were acting as a market maker, were trying to close that gap.
All right, Bloomberg Asia Equities report, CJ Chakraborty there. Let's take a look at how some of these India IT stocks are tracking at the moment. We have heard from Tata Consultancy Services. It anticipates freezing senior hiring due to a pause and pausing also annual salary hikes. This is according to the Economics Times in India, according to unidentified people who are aware of the development, and we might see Indian stocks more broadly fall on that report that Tata Consultancy is considering freezing that senior hiring. We don't have, of course, any source for that beyond the Economic Times, which cites people familiar with the matter. Let's take a look at how Asia benchmarks are faring. Meanwhile, a bit of a risk-off day around the region. The Hang Seng leading markets lower. Stocks in Hong Kong off by getting on for 1% now. There does appear to be a little bit of, a reality check, I guess you'd call it, around some of the trades deals that we've seen being struck. A little bit of scepticism in the EU, perhaps some buyer's remorse among some of the countries there about what they've seen. The Nikkei weaker by 0.9%. Some political uncertainty looming in Japan as well. Before we go, let's take a look at tomorrow's show. Goldman Sachs' Salman Nia is going to join us live to discuss opportunities in fixed income as traders await key rate decisions from the US and Japan. Also, JLL's Pamela Ambler shares her outlook on property investments for the rest of the year. That is it, though, for Insight. Horizons Middle East and Africa up next. This is Bloomberg.